Thank you. Thanks to the Precious Metals Summit for the opportunity to present. This is our first time in Zurich, and really excited to be here and present the Blackstone Minerals story. So you can see here is a picture of the previously operating Bandfuk nickel mine. It operated between 2013 and 2016, and it went into care and maintenance when the nickel price was about $8,000 per tonne. So we're looking to restart the mine, but we're looking to also build a downstream refinery which will produce the chemical products required for the lithium-ion battery. So one of the benefits of operating in Vietnam is we have abundant hydroelectric power and we have very competitive labour costs. We're looking to use those competitive advantages to make the refinery actually twice the size of the mine. So the mine that we will be building will produce around 20,000 tonnes per annum of nickel, and our refinery will produce 40,000 tonnes per annum. So we're looking to import feedstock from Australia and Canada, and we've done some initial strategic investments in Western Australia and also Manitoba. So we've made 2 investments in Manitoba and 1 in Western Australia. We like Manitoba particularly because it also has abundant hydroelectric power, so 100% hydropower in Manitoba. So I suppose for us, it's all about producing a low CO2 footprint green nickel product. Just a quick snapshot, we are listed on the Australian Stock Exchange. We're also listed on the OTC and the Frankfurt. We recently have had a tough run, as most of our peers, and we're currently trading around a $45 million market cap and around 10 cents. So to put that in perspective, our last capital raising, we raised $60 million at 58 cents. We're now trading at 10 cents. In that capital raising, we introduced some of the world's largest institutional investors, groups like Fidelity and BlackRock. We're also well supported by Deutsche Börse out of Germany, so they've been a long-term shareholder as well. So we've got some really good institutional support. Nanja Savetta out of Hong Kong. So the top 20 own around 60%. Board and management has 5% as well. So a very tight capital structure, particularly in that top 20. Board and management is, we've got a group of mining engineers and geologists. My background's in mining engineering. I've also spent some time in the capital markets as well. We've recently added Dan Locker. He was the Managing Director and CEO of Western Areas, which was recently taken over by IGO, and that was one of Australia's most, successful nickel mining companies. So I brought in Dan recently to help us in this next phase of development. I've also had some good analyst coverage on the sell side, so we've got some great support from our analyst community. So we're well located in this northern Vietnam region to the west of Hanoi. So we're looking to build a mine or restart the mine and also build a refinery. The mine is where we've delineated around 500,000 tonnes of nickel at about 0.4% nickel. There's byproducts of copper, cobalt and platinum group metals, and we're looking at a large-scale open pit mine with a low strip ratio of around 3 to 1. The downstream is where it gets really interesting and exciting. The downstream is where we're looking to take the nickel concentrate and produce a product called a precursor cathode active material. And that has nickel, cobalt and manganese in the ratio of 8:1:1. And this is the dominant chemistry mix for the high nickel cathode, which is it's all about the long range in your vehicle. So if you need long range, you need high nickel cathode. Very well located in this northern Vietnam region. The major players in the lithium-ion battery are South Korea, Japan and China, and we've done a lot of work, particularly in South Korea, at looking at a partnership model. So what we're looking at is bringing in a downstream partner, and that'll be either cathode, battery or car manufacturer or a combination of all three. And we're looking to sell down up to 50% of our project. And that's a competitive process which we're currently running. So this is a large-scale project producing around 40,000 tonnes per annum in that NCM 811 product. So we are looking at a partner that will bring the funding, or 50% of the funding, but also some of the technology that allows us to produce that battery-grade chemical product, the precursor cathode active material. And one of the benefits we have is that abundant hydroelectric power. So we have two of the largest hydro power plants in Southeast Asia, right in our province in the Sonla region. So it's really about driving that low carbon footprint and really focusing on ESG compliance. So it's fair to say we punch above our weight with respect to ESG, and that's really driven by our shareholders. Groups like Fidelity and BlackRock have really driven us to, I suppose, achieve a higher level of ESG compliance than a lot of our peers at a similar market cap. So you can see here, this is a cost curve for nickel sulfate. Nickel sulfate is the battery product that goes into the precursor, and you can see that we're looking to position ourselves in the lowest quartile. We're confident that we will be able to produce nickel sulfate at a lower cost than Indonesia, and that's very important. There is an abundant supply coming out of Indonesia, and we're confident we will be able to operate at a lower operating cost than the Indonesian supply. But most importantly, we will have a much lower CO2 footprint. So we've done some work with a group called Minviro. We see them as the world leaders in life cycle analysis of greenhouse gas emissions and other ESG factors. So you can see here our CO2 footprint much more lower than our peers in Australia and Indonesia. Indonesia nickel is going to have a CO2 footprint of 2 or even 6 times the CO2 footprint of our product. So you can see the Indonesian RKEF, which is the nickel pig iron to matte process, has a CO2 footprint that's just not going to be acceptable particularly for European and US car manufacturers. So what we're seeing is a lot of these car manufacturers are pushing back, and they're starting to set threshold limits on CO2 footprint. And so we're not stopping at being one of the lowest in the industry, and that has been verified by the Nickel Institute. We want to move towards net zero from day one. And you can see there we have a number of, things that we're investigating and to get us towards net zero. So we have a pathway to net zero from day one, and that's really driven by things like carbon mineralisation of through our tailings, our third-party feed. If we can source third-party feed from Manitoba, for example, we could reduce that CO2 footprint even further. So this is our nickel sulfide district. So 4 years ago when we moved into Vietnam, this was an exploration play. So we've gone in and we've drilled over 100,000 metres of diamond drilling. We've defined a 10-year mine life. We've got multiple deposits. Most of the nickel is sitting in one large open pit. Then we have a number of small high-grade underground mines. The underground mines are massive sulfide, and then the large-scale open pit is a disseminated nickel sulfide, very similar to the Canadian peers that have presented earlier today. So you can see that's our big open pit. I'd say it's medium grade. Some people will say low grade, but we sort of see ourselves in that medium grade range, in that sort of 0.4 up to 0.5%, depending on nickel or nickel equivalent. So you can see it all sits in one large open pit. It's a bowl-shaped intrusion. We mine the whole bowl full of nickel, and the cut-off grade determines whether the nickel goes to the waste dump or the mill. So you can see low strip ratio. That can get lower if we change the cut-off grade. So there is opportunity to even reduce the cut-off grade and push even more nickel through the concentrator. The concentrator will produce around 18 to 20,000 tonnes per annum for 10 years. And as I said, that's only 50% of the feed into our refinery. The other 50% will come from imported feedstocks from around the world. We do have the existing mine. Unfortunately, the existing mine is too small for what we've discovered. And so we'll be building a large scale, maybe 6 to 8 million tonne per annum concentrator. The existing mine was built for a small scale underground, and it's around 0.5 million tonnes per annum. Unfortunately, not large enough for the large ore body that we have discovered and delineated here. So this is our flow sheet for the downstream. And what we want to, I suppose, reiterate here, this is not a novel flow sheet, or there's nothing new in what we're trying to achieve here. It is new for the nickel industry to produce chemical products, but what we've done is we've taken tried and tested technologies and we've put them together to produce this chemical product. So the main technology here is pressure oxidation and solvent extraction, which has been used in the industry since the 1960s. So there's nothing novel about this flow sheet. We go through the pressure oxidation. We'll strip out the copper as the first byproduct, so we'll produce copper cathode. The leach residue is where the platinum group metals will report to. We have done some work on further leaching the residue to produce the full suite of platinum group metals. We haven't included the platinum group metals in our financials at this stage. We have included copper, the cobalt and the nickel. So you can see here we use solvent extraction to strip the metals out. The last two to strip out are the nickel sulfate and the cobalt sulfate. So we actually produce nickel and cobalt sulfate in solution. Then we combine that with manganese sulfate to produce the NCM 811. One of the other important points is we have mixed hydroxide precipitate as an intermediate product. And that is a circuit breaker for our process. So we can use that to break the flow sheet into two. And we can also use that as a feedstock opportunity halfway through the flow sheet. So one of the benefits of this hydromet pressure oxidation process is it's very flexible on feedstock. So for example, nickel concentrate that is potentially not suitable for smelters with high arsenic or high MgO can be suitable for our refinery. So we've got the ability to take high arsenic or high MgO concentrate with potentially is trading at a lower value in the market, so we can go and buy these concentrates. We can pay lower amounts for these concentrates because of the deleterious elements that are, I suppose, for the smelter process. We can bring those products into our refinery. The other benefit is we can use mixed hydroxide precipitate, which is the product coming from nickel laterite, as long as that has the appropriate ESG compliance and CO2 footprint. Nickel matte is another product from smelting. So the most exciting product that we haven't done a lot of work on, but we're confident we could feed, is the black mass, which is the recycled product from the lithium-ion battery. So very flexible in feedstock. It also allows us to arbitrage the different payabilities on these different products. For example, mixed hydroxide precipitate trades at a discount to nickel concentrate at the moment, but it wasn't that long ago where it traded at a premium. So you have that ability to arbitrage the different payabilities of these different products as in the market. So just to recap on what we've achieved, since we acquired the mine in Vietnam, we've drilled over 100,000 metres of diamond drilling. We've gone from scoping study to pre-feasibility study, and we're very close to completing our definitive feasibility study. So we've sunk tens of millions of dollars into this project. We've done a full pilot plant on the refinery, so we've done a 12-month pilot plant phase on that refinery, and now the next step is to look for a joint venture partner, lock in the joint venture partner, and lock in the debt that will be linked to that partner, and then move into the build phase. We've recently been given an opportunity to look at rare earths, and we see the Vietnam rare earths as some of the best rare earth opportunities in the world, so stay tuned on that opportunity. So just in summary, we are looking at a vertically integrated mining and refining business using the abundant hydroelectric power that we have in Vietnam. We've got a globally relevant nickel sulfide district with a proven resource and reserve, a first quartile cost position with one of the lowest carbon footprint in the industry. We are looking to do it through a partnership model, and we look forward to the further success of Blackstone Minerals. Thank you for your time.
Excellent. Thank you very much, Scott. Right on time. Thank you.